Why investing in the S&P 500 ETF might be the best thing to do. Well, different numbers can be found on the internet on how many investors didn't beat the S&P 500 consistently over a longer period of time. Personally, I think it's around 80%, because this number is popping up everywhere. But does this mean it's impossible to beat the market average? To be honest, I think it's possible, in the short term of course. You might have some luck with a few hand-picking stocks, but in the long term it's quite hard to beat the market average, as most people call it. Although 80% of the investors can't beat the S&P 500, it means 20% can. But for a lot of people, investing in the S&P 500 might be the smartest thing to do. In this video I'm going to show what the S&P 500 is and why it's so hard to beat the S&P 500. The track record, the pros and cons of investing in the S&P 500, and when I think you should invest in the S&P 500. I'm very excited to see what you guys think about this video, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. Please subscribe to join the community and to receive multiple analysis every week, where I will tell you everything you need to know about the stock market. So first of all, let me give you a short introduction of what the S&P 500 is. The S&P 500, or Standard & Poor's 500, is a stock market index that tracks 500 publicly traded domestic companies in the US. It is considered by many investors to be the best overall measurement of Americans' stock market performance. Not every company in the S&P 500 has the same weight. In here we see the top 20 companies in the S&P 500. Apple has a 6.7% share and Microsoft has a 6.1%. While AbbVie on spot 20 has a 0.8% weight. And we also see that all major companies are included in this list, of course. I found this article on the internet, which is written in 2020, but really points the essence why it's so hard to beat the market average. From 1999 to 2019, the S&P 500 returned a 239% or 6.29% annually. The median return was 52%, which is around 2.12% annually. And this is very important. While a stock has a 50-50 chance of being above the median, each has a much lower chance of being above the average. Over this period, only 26% of the stocks outperformed the S&P 500. So roughly 1 out of 4 stocks did beat the S&P 500. This means you have to either be lucky or extremely good at picking stocks. And I know this article is written in 2020 and the numbers may be a bit different right now, but not by much. So the first reason is that not many hand-picked stocks beat the market average. Second reason is emotions are playing a huge role. The effects of fear and greed have been widely documented. Humans are risk averse, and this tendency causes us to make the wrong risk-reward choices, which is inevitable negatively impacts our returns. Third reason why it's hard to beat the market average are fees and taxes. A certain percentage of your trading capital goes to fees, which you then have to make up for in returns to equal the market performance. The more you trade, the more fees you pay, and therefore the higher of a return you need to make. So it's hard to beat the S&P 500, but let's check the track record and also compare it to some other companies, since only 1 out of 4 stocks beat the market average. Year to date, it doesn't seem that investing in the S&P 500 was the best thing to do. Down almost 90%, which is quite a lot. But keep in mind that most stocks are down even more. And of course there are companies that outperformed better year to date. And maybe a lot of people outperformed the S&P 500 year to date as well. So let's check the biggest 4 companies in the S&P 500 over the past 5 years compared to the S&P 500 itself. They have a total weight of 18%. The first thing that we notice is that all these stocks did beat the S&P 500 in the past 5 years. And also by quite a lot of margin. Amazon had made the lowest return with 137%, but that's still significantly higher than the 75% return of the S&P 500. But the reason why people love investing in the S&P 500 is because of the historical annualized average return of around 10% since the 50s. So is investing in the S&P 500 really a good thing to do? Let's check some pros and cons. First of all, the pros. With investing in the S&P 500, you are making it quite easy for yourself. Buy an ETF that tracks the S&P 500 and you already beaten 80% of the investors, roughly. Another great thing is that you are well diversified, which is very important to a lot of people. It includes stocks in all major areas, meaning declines in some sectors may be offset by gains in the others. But this doesn't mean that you can't lose your money with investing in the SP500. But as I said a minute ago, since the 50s there's an average annual return of 10%. And if we check the last 30 years, we see that there were some periods that you had a negative return. We have the dot-com bubble in 2000, the financial crisis in 2008, and of course 2022. But in general, over a long period of time, you will get your 10% average annual return. Another great thing is that you receive a dividend in most cases. This also depends on the type of ETF you buy. But in this case, we assume you will receive a dividend. And you can reinvest this dividend, of course, in buying more ETFs. The S&P 500 is also more likely to bounce back from a market downturns, since it's a representation of the stock market as a whole. But of course, there are also some cons. The main drawback to the S&P 500 is that the index gives higher weights to companies with more market capitalization. The stock prices for Apple and Microsoft have much greater influence on the index than a company with a lower market cap. Next to that, you can't beat the market with owning the market average itself. Of course, you can do both stock picking and investing in the S&P 500, but your S&P 500 ETF will always be the market average. The last thing is that investors like to play the game. There's a lot of things to learn and you might get better at picking the best stocks with the highest returns. And that's what people are aiming for, beating the market. And now we come to the point of when I think you should invest in the S&P 500. And of course, there are different reasons. So, if you want a safe investment for the long term, I think the S&P 500 is the way to go. But keep in mind that there were some periods or years that the return wasn't great. So make sure you invest in the S&P 500, you don't want to cash out very soon, since it can take years to recover after a crash. So invest when you have a long-term investment horizon. Another reason why you can invest in the S&P 500 is that you think the US will do great in the coming years or decade, since it's tracking the 500 biggest companies in the US. And if you are a passive investor, instead of an active handpicking investor, the S&P 500 is the way to go. You don't have to check it every day, but maybe once a month to reinvest your dividends or to buy some new ETFs. So it's a great investment if you are a passive investor. The last reason why you should invest in the S&P 500 is when you accept market average returns and beating 80% of the investors, or 75% of the stocks in the market. You will have a better risk-managed portfolio with owning the S&P 500 versus handpicking stocks in most cases. So if you don't like risk, the S&P 500 is the way to go. But keep in mind this also comes with lower returns. My final conclusion is that the S&P 500 is a great way for beginners to start investing, and if you are accepting market average returns, which is okay of course. But if you like to try to beat the market, then stock picking may be something to you. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.